Hello, and welcome to today's webinar, Stepping Up from QuickBooks with Automation and Integration. I'm Bob Shago with Sage, and I thank you for choosing to spend time with us today. First, a bit of housekeeping. We'll send out a copy of the presentation and a recording of the webinar via email when we're done. Please take a few minutes to fill out the survey at the conclusion of today's webinar. We really appreciate your feedback. It helps us improve these events. Our agenda today is this. First, we'll look at automation and integration and why these are important. Then we'll look at signs that you've outgrown QuickBooks to automate processes. I'll share with you a real-life example of a QuickBooks user who moved to Sage Intacct. I'll show you a demonstration of how you can easily automate business processes and how Sage Intacct integrates with other cloud platforms. Then I'll share with you the benefits you can expect using Sage Intacct for business process automation. And lastly, we'll answer your questions and let you know where you can find more information. Let's get started. Most small businesses begin their financial lives using QuickBooks. With more than 80% market share, it is by far the most popular small business accounting application. It's well known, it's easy, it works, and it offers the functionality a business needs when it's starting out. It's also a drain on growing businesses. If your business has moved beyond the entry level, your organization may be facing several challenges as you hit QuickBooks limitations. It wasn't designed to provide professional financial management capabilities to growing organizations with sophisticated, evolving demands. These companies require more and better visibility into financial and operational performance and functionality. That includes automation, integration with other critical applications, anytime, anywhere access, enforcing internal controls, and customization. If your company has outgrown QuickBooks, the hidden costs of not replacing it can be staggering. Some of the warning signs include not hitting quotas or growth targets, flat or declining sales, missed customer commitments, inability to grow and react to market changes and opportunities, lack of visibility into costs, profit, and loss, and the inability to maximize revenue due to non-optimized pricing and ineffective discounting programs. At this point, you might be thinking, really? All because of QuickBooks? Yes, because you've reached the point where you don't have the real-time information you need to make strategic data-driven decisions. Organizations accustomed to spending extra time managing workarounds in QuickBooks may not even realize the number of inefficiencies getting in the way of doing day-to-day business. These inefficiencies become ingrained in everyday operations of the business, and because there's no immediate cash outlay, doing nothing may seem like the only option, and at least the most cost-effective choice. But the reality is, if you're using QuickBooks, you're incurring a broad range of costs. Let's talk about some of those costs, and we'll use purchasing as an example of how QuickBooks' lack of automation is hurting your business. If you're using QuickBooks, invoice capture is a manual process. With QuickBooks, you create a new bill and then input all the needed information. QuickBooks organizes the data so you can see which vendors have been paid, the vendor detail, and you can pull an AP aging report. But what it doesn't do is automate the process from the time the invoice comes in until the invoice is archived. Even though the invoice data is entered into QuickBooks, the invoice is manually routed for verification and payment, either via email or on paper. The biggest challenges are data entry, invoice to payment matching, and solving for lost and duplicate invoices. Instead, what if you could input the invoice using automated data capture, and the invoice is automatically compared to the information in the system? If it all looks good, then it's automatically routed to the right approvers, paid, and then archived. If something doesn't look right, say the quantity billed doesn't match the quantity received, or the unit price or tax is off, then an alert is generated, and the process is interrupted until the issue is resolved. When the process is automated, invoice approval is faster. There are fewer errors, and productivity increases. Automating the process cuts costs. Depending on which report you'd like to believe, the average all-in cost of processing a single invoice is $15. That drops to around $2 when you automate the process. Now, think about how many invoices you process a month. If you're only dealing with a few invoices, then you can live with the pain and hidden costs associated with QuickBooks. But if you're processing hundreds of invoices every month, these are heavy burdens. and you end up spending much more of your time on this instead of more value-added projects and activities. Purchasing is one of the many processes where QuickBooks falls short on automation. Again, it's a nice place to view invoices, place orders, payroll records, and the like, but it doesn't work for a growing company, especially when you want to link the financials to other business applications. No matter how you slice it, manual processes are error-prone and time-consuming, and it makes it difficult to gain an integrated real-time financial view of a company's end-to-end processes. QuickBooks is designed for companies that need simple bookkeeping and have a single entity. Even with just one business entity, QuickBooks users end up wasting time investigating anomalies and exceptions, performing manual reallocations, and reconciling bank statements. If you're using QuickBooks, you're doing the following manual tasks to close: consolidations, currency conversions, intercompany eliminations, revenue recognition, allocations and accruals for expenses, depreciations, amortizations, and adjustments. Business success depends on the ability to see what's happening in all areas of the business, especially if the operations or market conditions are changing rapidly. Business leaders need a holistic view of everything from bookings to available capacity to inventory levels and, of course, financial metrics. But business leaders can't make informed, timely decisions if it takes weeks to assemble, present, and analyze that data. Manual processes in QuickBooks choke the ability to share real-time financial data, so leaders in the organization can make strategic data-driven decisions. Let's turn to application integration, which is one of the ways you can improve business process automation. Application integration facilitates the running of individual applications with other applications. Merging and optimizing data and workflows between multiple systems modernizes processes and supports agile business operations. This reduces costs, reveals insights, and creates greater efficiencies and capabilities as compared with using independent applications. Many businesses run core financial and enterprise resource planning software originally developed more than a decade ago for the desktop or data center. Some of these are retrofitted for the cloud, but can't take full advantage of the scalability, adaptability, and robustness of cloud-native architectures. QuickBooks is a perfect example of this, and the online version of QuickBooks delivers significantly less functionality than the desktop version. If you're running on-premise or retrofitted online software, it's worth noting that a lot has changed in the business world. Most retail organizations and business-to-business suppliers have adopted e-commerce transactions, requiring significant enhancements to their line of business systems to capture and process orders, manage inventory, track shipments, handle returns, and protect against fraud and cybercrime. The as-a-service business model is growing faster than the linear business model. Companies that never anticipated renting their products and services are now transitioning to subscription and usage-based pricing. This has massive impacts on functions that include accounting, billing, Salesforce compensation, and financial reporting. Few legacy application developers anticipated such sweeping changes to business models. Certainly not QuickBooks. Customers increasingly want to interact with the businesses via website or multiple apps which self-serve. Older applications weren't designed for direct use by customers. Intuitive interfaces, lightning-fast response times, and hardened security are table stakes for today's customers. Data analytics increasingly govern rapid decision-making, requiring businesses to shift from batch to real-time processing and to make it simple to share data between transactional and analytical applications. New privacy protection regulations require more stringent approaches to data governance, protection, and reporting. The General Data Protection Regulation and the California Consumer Privacy Act are two examples, as are the pending federal American Data Privacy and Protection Act, and another 29 pending pieces of state legislation in the U.S. With these changes in mind, it's more important than ever for companies to integrate their core business applications rather than be surpassed by competitors or abandoned by their markets. So what are some of the signs you've outgrown QuickBooks? You have multiple entities. With QuickBooks, each entity requires its own instance, so there's no chance that you can streamline business processes to improve productivity, especially if you have 3 or more entities. Recently, I spoke with a former Recently, I spoke with a former QuickBooks user in a company with 80 entities, and she told me that she spent 20% of her day just logging in and out of QuickBooks. Your chart of accounts is growing. As you add new accounts, there are workflows associated with each, and QuickBooks will not let you automate these. You're finding errors and spending a lot of time correcting these, or worse, these errors went undiscovered for a while and end up being major problems. Your team spends a week or more on each purchase order approval or invoice. You're spending too much time printing, signing, mailing, and reconciling checks to vendors, or you're processing more than 200 invoices per month. Your bank reconciliations are so tedious and time-consuming that you only do them once a month, and you go weeks without knowing your cash position. You're adding to the company's tech stack. One great example is Salesforce for CRM. If you're using QuickBooks and want to exchange data between the two applications, you'll need to add even more software to your tech stack, as there's no direct connection between the two. And think of what a mess that would be with multiple QuickBooks instances. You might be filling the gaps with spreadsheets, but spreadsheet errors are not a question of if, but when. And that can be a huge problem if errors go undetected for any length of time. Let me share with you a real-world example of a former QuickBooks user who switched to Sage Intacct. GoGuardian provides Chromebook management solutions that keep students safer online and make teaching easier. The company experienced tremendous growth while on QuickBooks, and that slowed the receipt of revenue, prolonged month-end close, and delayed visibility into its cash position. The sales operation team had to tediously convert opportunities into contracts, then manually invoice those contracts, and send payments to a third-party accounting firm, which posted them to the general ledger in QuickBooks and put them into an Excel-based revenue recognition tracker. They wanted a robust system that could automatically process contracts as purchase orders were received, bill customers, accept payments, post to the general ledger, do revenue recognition, and produce financial reports. GoGuardian deployed Sage Intacct as the core of its best-in-class financial ecosystem and automated its entire order-to-cash process. They eliminated a giant 5,000-line spreadsheet that kept track of all their contracts and revenue data across varying licensing terms. Instead, they relied on Sage Intacct to streamline their accounting processes and make them scalable. Sage Intacct seamlessly converts closed won opportunities from GoGuardian's Salesforce instance into contracts, invoices customers, closes accounts receivable, and generates revenue recognition schedules, automatically posting to the general ledger. This automated order-to-cash process has increased cash flow by 50%. In the words of Elliot Wu, Director of Accounting at GoGuardian, by automating our full range of accounting workflows, Sage Intacct helped us scale easily, even as our sales doubled. Now the company can close its accounts receivables in a single day at month's end. Additionally, the platform drives a painless, configurable process that sends customers reminders, assigns owners to collection cases, and centrally records all activity to provide real-time visibility into customer histories and aging balances. Let me show you how automation and integration work in Sage Intacct. Like order entry, we have an overview map that shows our workflow through requisition to purchase orders, receivers, and eventually vendor invoices. I'll go ahead and create a purchase order. I'm just going to click on the purchase order icon to create this new purchase order. Know that if your main job revolves around purchasing, you can set this map as your home page at login. Our example company needs more stock, so I'm going to create a PO to buy items from Defender USA. I'm going to purchase 10 more of these Defender systems. I can see the extended price. As I create additional line items, the system will keep giving me lines as I enter them. Just like in order entry, I see the default vendor contacts and all the different controls. My header shows all the information for this transaction so far with all my information entered. I'll post this purchase order. Now some days go by and I receive the order from the vendor. Now I go to this purchase order and convert it to a receiver. Come to find out, the vendor's low on the quantity. On my receiver, I note that I received 8 of these. I don't want to pay for 10 when I only got 8. With the receiver updated, I'm going to post it. I can now convert this receiver to a vendor invoice. I see that everything is in here the way I expect it to be. I can add the vendor document number and post that to the vendor invoice. Now I have this vendor invoice posted in purchasing, but it did something else. It went over to accounts payable and it created a bill. So now if I go into my bills and accounts payable, I see that I have this new bill to Defender USA. I can choose the bill and see everything that's on it. Now it's keeping track by account and amount rather than item and quantity. This is going to fall nicely into my chart of accounts and hit the general ledger. I've still got all the information about the bill, and from here I can select bills to pay and move my payment process forward. On the back end, where I need to distribute indirect costs or revenue across departments, locations, or some other dimensions, like a product or project, dynamic allocations let me set up automated allocation journal entries to properly allocate periodic expenses and revenue that run automatically. With these allocations set up and running, I get a clear view of the true performance of my organization without having to run complex calculations in spreadsheets. Sage Intacct built-in approval processes let me set approval requirements on bills waiting to be paid. I can even set up approvals on a requisition before the purchasing process goes too far down the road. Approval can be set by dollar amount, by department, or by individual approvers. You can choose to have one approver at a certain dollar amount and then 2 or 3 approvers at higher dollar amounts. Approval notices get sent out to the approvers automatically, and they can approve with a mobile device, and you're not left playing find the manager to get the purchases approved. So what are the benefits of using Sage Intacct as compared to QuickBooks? Business process automation reduces errors and improves accuracy, cutting costs and saving time. Integration with other business applications and business partners allows for the bidirectional sharing of information, so you can better manage your customers, supply chains, and transactions with trading partners. When it comes to AP and AR, you can automate up to 90% of these processes. Through automation, you can potentially cut hours down to minutes. Your team can dedicate the additional time in their schedules to helping the business reach its larger goals and planning for the future. You can also automate reconciliations with ease, regardless of the number of entities. Sage Intacct connects with over 10,000 financial institutions worldwide to give your team an accurate, up-to-date picture of your cash. This lets you make investment decisions in hours rather than days and spot the potential for poor cash flow before your company begins to feel its effects. Easy matching and reconciliation mean you can soft close cash daily. You can provide business leaders with accurate and current cash positions to make critical decisions in the moment. But most importantly, automation and integration give you and the entire finance team more time to be strategic. Get your life back as Sage Intacct does the heavy lifting. This way you can spend more time doing financial analysis and less time doing bookkeeping. So let's get to some questions. Can you expand on contract management? Sure. So we offer a contracts module to manage and automate billing, recognition, forecasting, and metrics based on the terms of each customer contract. So this eliminates the painful manual work around multiple entity consolidations, currency conversions, journal entries, and deferred revenue management. Many of our users synchronize directly with Salesforce to speed up their order-to-cash cycle and automate this complex billing. So you can accelerate cash and increase cash flow by automating this quote-to-cash workflow, and Sage Intacct eliminates the manual effort, it accelerates the processes, it delivers instant forecasting on the contracts that you have in-house, and it gives data-driven insights to guide growth decisions. Another question, it's a comment really. Automation sounds great, but I'm worried about how we move toward automation since our processes are completely manual. This is not uncommon. So this is an excellent point. Automation isn't something you just turn on. You have to look at your processes today and map out how they work. You need to see if there are any areas for improvement. If there's a step in a manual process that's causing a bottleneck, replicating that step as an automated process may not solve the problem. And just because you can automate something doesn't always mean that you should. A broken process automated creates automation that simply fails faster. I should mention that at Sage, we're making significant investments in artificial intelligence and machine learning to help enhance our platform. We have a group within Sage, the Sage Artificial Intelligence Lab, or SAIL, that's developing and embedding machine learning and artificial intelligence across the entire portfolio of Sage products and services. Let me give you an example. Let's look at how automation helps with creating timesheets. For project-based timesheets, reporting professionals can use an automated assistant to do the grunt work of combing through their calendar, email, and files to construct their work week. People are saving time by only having to review, adjust, and submit. Another example that really runs across any type of business is our general ledger outlier detection. So this is an AI tool that scans all the transaction in the general ledger and looks for anomalies, and then flags those anomalies and makes suggestions on first why it flagged it and how it might be resolved. And over time, it learns from the user's decisions to handle many of these in an automated fashion. Well, that's all the time we have for today. I want to thank you for joining us. If I didn't get to your question, we'll follow up directly with you. And you can learn more about Sage Intacct by visiting us at sageintacct.com. Also look for more webinars as we dig deeper into some of the other ways companies and organizations are stepping up from QuickBooks. Thanks again.